Okay, let's unpack this. We've got a fantastic deep dive for you today.
Yeah, we're pulling insights from that popular finance blogger, Cat's Penknife.
Exactly, his post from August 24th, and also, the comments section, which is always lively.
Always interesting stuff in there.
So we're diving into his latest market takes, some personal thoughts, and some pretty surprising reader interactions, too.
Our goal today, really, is to give you that shortcut.
Yeah.
Get you informed on a whole range of things.
Right, from chip stocks going wild to his personal finance ideas, even that weird story about Beijing checkpoints.
We'll pull out the key stuff, those aha moments.
And hopefully you walk away feeling like you've got a good handle on it, not just buried in information.
Definitely.
Speaking of those checkpoints, imagine this. You're stuck in traffic heading back into Beijing.
Right.
And you see some cars just wave through, but others, they get the full search, trunk opened, everything.
And you're just sitting there wondering, what's the criteria? How do they decide?
Exactly. That's one of those little personal observations he throws in right alongside the heavy market analysis. It's a great mix.
It really is. So where do we start? The personal stuff.
Yeah, let's do that first. Before we get into the market chaos, he shares some really interesting personal bits.
Like the question about having too many interests.
Yes. A reader asked, I'm interested in everything, but I haven't mastered anything. What do I do?
And his advice was pretty practical, wasn't it?
Super practical.
Yeah.
He basically said, focus your mastery on skills that actually make money. For everything else. It's fine to just be curious, broadly interested. You don't need to be an expert.
He even admits that's him in many areas broad, but maybe not super deep.
Which I think a lot of us can probably relate to.
Absolutely. And what's interesting there is how it touches on that real-world problem. Balancing curiosity with, needing to earn a living.
Right.
It forces you to think strategically about where you put your time and energy. It connects directly to productivity, financial health.
Totally. And related to that, someone asked how he seems so professional if his interests are so broad.
Ah, yes, the secret.
His secret is pretty simple. Only talk about what you know.
Yeah, makes sense.
If he doesn't know it, he just doesn't bring it up. It's straightforward, but effective for building credibility, isn't it?
It really is. It's a kind of intellectual honesty. Applies to markets, applies to life. Be a trusted voice.
Then you get the really personal anecdotes, like that checkpoint mystery we mentioned.
Yeah, his family got waved through, others stopped, and he's genuinely puzzled.
He even shot down the idea that it's just about having a Beijing license plate. He saw other provinces wave through, and Beijing plates stopped.
So the mystery continues.
And someone cheekily asked if he even has a driver's license.
Did he answer?
He did. Confirmed he got it back in 2008. Even named the driving school.
Ah, nice detail.
He also talks about his wife, calls her a tiger mom, about their eldest kid's education.
Oh, yeah. Cutting holidays short for school.
Yep. And he pushes back, jokingly, on having another kid, saying it would delay their liberation by another 5 years.
These little glimpses, they make him relatable, sure, but they also show that same critical thinking, right? Questioning assumptions everywhere, not just in finance.
Yeah, observing the world, looking for the why.
It's consistent.
And for anyone dreaming of, a different career path, he tackles that big question, when can I quit my job to trade stocks full-time?
Oh, the million-dollar question. Or maybe multi-million-dollar question these days.
Right, and his answer is quite philosophical, actually. He says it's a natural progression. Meaning, if you still have to ask the question, you're probably not ready. You'll know when you're ready because the money from your regular job just won't feel that significant to you anymore.
That's a powerful way to frame it. It's not just about hitting a certain number in your brokerage account.
Exactly.
It's an internal shift, a change in perspective, in what you value, the psychology of financial freedom, not just the math.
Well put. Okay, so let's pivot now to the market itself.
Let's do it. The A-share market. Friday was pretty explosive.
Absolutely. Mostly driven by that big news in the chip sector, right? DeepSeek's upgrade.
Yeah, V3.1, specifically adapted for domestic chips. That was the catalyst.
And boy, did the market react. Cambrian was up, 20%?
20%. Hygon Information, also 20%. Smilg's up 14%.
Even the chip ETFs, which he notes rarely hit their daily limit up, they did.
It just shows the incredible impact of these tech breakthroughs, especially when they align with national strategic goals.
Right, domestic chips.
Adapting AI for local hardware, that signals a huge potential shift, and you see it instantly priced into those stocks.
A big winner was the Star Market 50 ETF. It jumped 9.5%.
Which was actually more than the underlying index itself, right? The index was up 8.6%.
Yeah. And he points out why. He calls this ETF basically a diluted chip ETF.
Because its weighting in chips is so high.
Exactly. 57 to 58% is in the chip industry. So yeah, it looks like broad market exposure.
But its fortunes are really tied to that one sector.
Classic. Same source of profit and losses.
And that's a crucial point for you, the listener. You really need to look under the hood of an ETF. Diversification isn't always what it seems on the label. Sometimes you're making a concentrated bet without fully realizing it. Dig into what you actually own.
So true. Okay, still on chips. Cambrian's valuation. Everyone's debating if it's too high.
Always a hot topic with these high flyers.
And then bam. August 24th, Goldman Sachs drops a report.
Oh yeah, I saw that. The price target bump.
Huge bump by 50%. From 1223 yuan up to 1835 yuan. He said he had to double check it was real.
That's a massive jump. Wow.
What's also interesting is their previous target, the 1223, they set that back in April when Cambrian was trading around 600 or 700.
So they actually nailed their earlier bullish call. They delivered, as he put it.
Yeah.
Well, it just shows how much weight these big analyst reports can carry. They can shape sentiment, validate past calls, and it really highlights how stock valuation works, especially in tech. It's often driven by future potential, not just current earnings, even if valuations look stretched.
Which raises the question, is it sustainable growth or is it just hype?
Always the question.
And this whole thing leads him to think about the Mutai curse.
Ah, market lore. The king of stocks possibly being dethroned.
Potentially. He notes that historically, maybe 8 or 9 companies have briefly had a higher stock price than Mutai.
Only to meet unfortunate ends, as he says.
Yeah. He's holding off on the details for now, maybe until it actually happens, if it does.
But that curse, it's fascinating. It's not science, obviously.
Right.
But it speaks volumes about market psychology, doesn't it? About how extreme excitement can lead to valuations that just can't last. History repeating itself, maybe.
Herd mentality, maybe.
Could be.
Yeah.
It makes you consider those psychological factors even when the fundamentals look strong on paper. Sentiment can be powerful.
Okay, let's zoom out a bit. Bigger picture. The Fed.
Right. Powell's comments Friday night. Finally, a more dovish signal.
Hinting at a possible September rate cut if the job market keeps showing risks.
And the reaction was immediate. U.S. stocks, crypto.
Everything soared. ETH hit an all-time high, 471.
Shows you how sensitive markets are to Fed speak. Just a hint of a policy change sends ripples everywhere.
Though he did find it interesting that the betting markets, the chain casino as he calls it,
still showing a 20% chance of no rate cut.
Yeah, despite the pretty strong signal from Powell.
Well, that just underscores the uncertainty, doesn't it? There's never total consensus. Markets always have diverse opinions, even when the direction seems clear.
Okay, so that's the macro vibe. Now, how's this playing out on the ground? He gives a quick rundown of some half-year earnings reports, a real mix.
Yeah, it's a snapshot across different industries. Let's see.
Real estate, Vanke, big loss, $11.9 billion, but he says that was pretty much expected.
No surprises there, given the sector's struggles.
Then solar, or PV, Jinko Solar, Longo Green Energy, both big losses too. $2.58 billion, $2.69 billion.
He called that PV basic operation. Like, this is just how it is right now.
And he links this back to that anti-involution idea we talked about, the intense competition leading to consolidation.
Right. And his point is, those policy efforts to fix it, they take time.
You don't just flick a switch.
Exactly. You don't get hit and feel the pain immediately. It's a slow process. Big players buying smaller ones, shutting down factories, layoffs. It takes a while to show up in the earnings.
Same thing in lithium, right? Ganfeng Lithium lost $531 million. Less than last year, but still part of that anti-involution theme.
Precisely. These aren't just bad quarters. They reflect deep structural changes. Necessary changes maybe for long-term health, but painful in the short term. Investors need to see the long game here.
Okay, shifting gears. Liquor, Sheed Spirits, profit down 25%.
But Q2 was better than expected, apparently.
Yeah, he sees that as a possible sentiment turning point. Maybe things are bottoming out there.
But then you have UB Liquor, profit drop, 92.6%. Massive.
Ouch. But he says, don't worry, it won't extinguish it. Why?
Because he argues that stock isn't really trading on performance anyway. It's driven by something else.
Speculation. Narrative.
Seems like it. It's a great contrast, actually. Sheed might be showing fundamental improvement, while Jugui highlights how disconnected a stock can become from its earnings reality. Are you buying the company or the story?
Good question. Traditional Chinese medicine, Pian Se Huang, profit down 16.2%.
Yeah, even though it's a leader, the numbers look weak. Especially, he notes, compared to Mutai, which showed some growth even in its tough times.
Interesting comparison. And lastly, animal husbandry, Wuyuan.
Also seeing anti-involution, planned pig breeding, because the hog-to-grain price ratio is really low, below 6.1.
Which hurts profitability.
Right, and Muyan did something unusual, a mid-year dividend. Suggesting they're shifting focus, less on expansion, more on returning cash to shareholders, becoming a red envelope stock, as he calls it, prioritizing dividends.
So across all these reports, you see completely different stories playing out.
Absolutely. Structural changes, policy impacts, pure speculation, shifts in company strategy. It's a complex landscape. The challenge for you is figuring out which forces are dominant in each case.
Makes sense. Okay, one more comparison question from a reader. China, Shenhua versus Yangtze Power. Similar.
Good question. His take is not really that similar.
Why not?
Well, he notes Yangtze Power's main shareholder is buying more stock, but thinks it's mostly just to calm nerves after a dip. It's a huge company, 700 billion yuan market cap.
Okay.
He sees Yangtze Power as a top A-share stock, fundamentally. But crucially, it's anti-cyclical.
Meaning it does better when the overall market is weak.
Exactly. Better in bear markets, often lags in bull markets because it's stable, defensive. Electricity generation is pretty consistent.
Whereas Shenhua is tied to coal prices,
which are very cyclical. He points out coal prices dropped 20% this year alone. Big swings.
So Yangtze Power is better if you want something to resist market downturns.
That's the idea. It really drives home the importance of understanding the business model. Is it cyclical? Is it stable? How does it behave in different market conditions? It's not just good or bad, but good for what?
Right, good for this environment or that goal.
Precisely.
And just quickly, he also mentioned the pet economy, new gold, trendy toys.
Ah, the new happy self sectors.
Yeah, basically stuff people buy for personal indulgence. He sees it as a trend, but notes it's already had a big run-up. Remembers talking about it when Pop Mart was surging.
So maybe the easy money's already been made there for now.
Seems to be his take. Okay, so wrapping this all up, quite a journey today.
It really was. From personal philosophy and career choices.
To crazy market swings and chips, analyst calls that Mutai curse.
Then the Fed, and a deep dive into earnings across so many different sectors, all through the lens of Cat's penknife.
It really shows how finance isn't just...
And it leaves you with a big question, doesn't it? In a market that's clearly driven by both real shifts like domestic chips and powerful stories or sentiment, like the Mutai curse.
Yeah.
How do you figure out what really matters for your own understanding, for your own decisions? Is it the flashy surge of a hot stock? Or those slower, grinding changes like anti-involution that take years to play out?
That's the core challenge, isn't it? Looking past the noise, understanding the why.
Exactly.
And maybe a final thought. He ended his post saying, several posts were deleted tonight.
A little reminder.
A subtle one, yeah. But maybe a potent reminder about information itself. What you see, what you don't see, what gets filtered. It all matters.
Absolutely. Constant critical thinking is key. Keep digging, keep questioning.
Couldn't agree more. We'll leave it there for this deep dive. See you next time.